Hello, traders. It's time for the weekly hypos, or weekly, I guess it would be my weekly kickoff levels. This is a weekly chart. Immediately when we open up the weekly chart, there's something that catches my eye. ICT taught me long ago, when you see a jagged top, there's no clear point to reach for or whatever, and a straight line at the bottom, that straight line is going to be addressed at some point. Okay. It may not be addressed right now because we still have the 25% extension of this range, which is at 24,450. 24,450. We're not that far away. 24, where is 450? Right about there. We're not that far away, and we are extremely bullish right now. The last time we made an all-time high, we did poke a little bit above it. We made it to the 25%, and then we began to range. So that's the only thing we have to go on. It's history, really. Being a history teacher, I kind of like to see history repeat itself. So going to that 25% extension is definitely a possibility, and then maybe fall into a range. But this straight line right here catches my eye big time. And I've already got all this stuff marked out in my little prep work, but I think it's important to look at it. Like I can show you my lines there. From without all the noise. Okay, so definitely a straight line here. We have a weekly fair value gap here. We ended the week with a doji candle. So beginning to range right here, or offering back down to this level. If we're just looking at this as like a 1 minute chart and we're in a consolidation pattern, offering down to the bottom of the consolidation would not be out of the question, right? So that is a possibility. I think if we start offering lower, I don't know if we're going to get there in a day. I mean, it's 1,000 points. But when we start offering lower, this is an area where I would think the market would trade to. Okay. So now let's look at the daily perspective. From the daily perspective, we came down and we took out this straight line with this candle, and then offered back to all-time highs again. And then we put up 3 candles to the downside. This wick right here catches my eye. ICT would call that a premium wick. Finding willing buyers at a higher price. When I put my lines back on here, you will see this wick went exactly to 50% of this wick. Let's take a peek at that real quick. It's called a premium wick. Okay, so people with big money are selling to us retail guys that think, oh man, this thing's going to the moon. And so they're finding willing buyers at a higher price. Market trades down and then pushes back up to the 50% mark of that wick. See that? I mean, I don't think it's coincidental that it touches that to the freaking tick. That's definitely an indication that we're going to be offering lower, at least for now. I'm not saying it's going to continue. Now, I did not put a measuring tool on this wick to see if that one goes to 50%, but I'm going to do it right now. From right here to right there, we didn't quite make it to 50%. That's could also be an indication that I don't think I'm 100% on it. There we go. Yeah, that's pretty close to it. Didn't quite make it to 50%. So that could be an indication that we take this wick out, or it could be an indication that we didn't even have enough strength to get back to it. Not sure. But that little pattern right there is a possible indication that we could start offering lower. Okay. So let's go back to hiding these lines and look at this daily chart again from a different perspective. The relative equal lows on the weekly chart are going to be right here. And what do we have that we could possibly offer to on the daily chart? We have a little fair value gap here that's been wicked into, and also down here. And I believe this is also a fair value gap on the weekly chart. We'll add our lines back in real quick and just look at that. Yes, weekly fair value gap. Okay. Relative equal lows on the weekly chart. All right. I like to trade on intraday, so I do 4-hour regular trading hour stuff. So let's take a peek at that. Regular trading hours only. How did it perform at that premium wick? We had a sell-off day, wicked into this 4-hour fair value gap, and went back up to that 50% premium wick, and then we sold off, filled in this regular trading hour 4-hour gap on Friday, and then started trading back up. The top of this candle where we reached to was a breaker on the 1-minute chart where we rejected off of, but it created this 4-hour fair value gap to the downside. This is regular trading hours too. This is when the highest volume is occurring. That's an important level. We also have this regular trading hour 4-hour low, and we have a regular trading hour. This is a major level. It's both regular trading hours 4-hour low. It's also a daily low, and it's equal lows on the daily chart. We can look at that real quick. Relative equal lows on the daily chart. There we go. And it's also relative equal lows on the, or a low for last week on the weekly chart. Okay. Go back to the daily just for a second and let's look at this. We have this fair value gap on the daily that hasn't been traded to at all. If we treat that like we did the fair value gap on Friday, then we could be aiming for these lower hanging fruit down here. The market wants to paint that wall. But we also have this 25% extension up here we could be reaching for. So it could go either way. But those levels are definitely levels that will be hit at some point. The market is not going to run away and leave these open. We're going to trade back down to them at some point, but it may not be Monday, it may not be this week at all. But we do definitely, I would say, for my hypo for the week, let's go to the 4-hour just for a second. If we wick up into this area, but we leave it open and start offering lower, I think you can confidently hold at least to this low, possibly to this low, depending on the speed of the move. I mean, how many points would that be? That's a good ways. That might take a day or two. Yeah, 147 points. That can happen in a 2 minutes on the Nasdaq. So these definitely are areas I want you to keep an eye on. And if we can get past all of that, then trading into this is possible. But I want you to, if I extended this line over to this fair value gap, we went right there, we filled it, and then we rejected back up. I was expecting a pushback to settlement, but we didn't get it. So to me, that indicates we might offer lower. We might. But ES is extremely bullish. We've been in a very bullish pattern. So we may extend to this 25% extension before we offer lower. We're not that far away from it. We're only 400 points. This objective has been met. So if we're going to start offering higher, this fair value gap needs to be taken out, rejected off of, basically inverted, and then we need to start trading above the halfway point of this premium wick right here. Start having candle bodies close above it, and then I would think we could confidently start taking longs, reaching for this area. Okay, those are my two hypos. I'm going to be watching. I would like to see it trade down to here before it goes up, but I'm okay with either direction. I'm gonna be watching my regular trading hour 4-hour highs, which this would be a 4-hour high here and also here. I'm going to be watching this one real close. If we take it and reject off of it, or if we open lower and fail to fill the gap at 5 o'clock this evening, I'm gonna be looking to take out some of these levels down here to the short side. That's my plan, my trading plan. On the contrary, if we open higher and fail to fill the gap to the downside, then I'm going to be looking to take out some of these higher levels here. All right, that's it. I sure hope everybody is patient and waits for a good setup this week. Set your intention early on what you're going to do, and do your very best to not let your emotions get a hold of you and take stupid trades. It's very easy to do. It's very easy to make a mistake as well. So make sure you're in an environment where you can concentrate. I've just clicked over and checked the ES chart for a minute on the chart that I was using, MNQ, and I accidentally went 5 long on ES one day and lost $500 like that, purely accidental. So make sure you're mentally focused when you're in here trading. It's a very competitive environment. Mistakes are common, and they're also very easy to make. And they're very costly sometimes. Sometimes a mistake may make you money, and it be completely accidental. But you got to realize that's a mistake. And you can't be consistent making mistakes. So they will happen from time to time, and you just got to take your lumps and move on. I'll leave this as the end screen. Blow it up so you can see the levels really good. There's actually a weekly fair value gap all the way down here. I don't know that we will trade that far down before going to the full extension of the range, but addressing these, I think, is pretty likely. This will be eventually traded to, I would suspect, this weekly fair value gap, and this is relative equal lows on the weekly chart here. And it also corresponds with regular trading hour lows. I'm not going to mark every one of these levels because we'll get those as they develop. We'll just have to see where it goes. But if we just start rocketing down, this is an area where you might want to look for. But for tonight's open and Monday, we're either going here or we're going there. One of those two is going to happen. So keep your eyes peeled. Remember to be kind to yourself. Be kind to one another. I love each and every one of you. If you have any questions, drop them in the comments. If you haven't subscribed, please do. I hope my reversal pattern videos that I'm putting up each day are helping you see how these things are forming in real time, where you can confidently take trades off of those breakers. That it does work. They don't always look the same every time, but there's definitely an algorithm referring to those candles that I'm marking out. And when you can start spotting those in real time, you're going to start being profitable. Until next time, folks, be patient. Take good trade setups. Okay.